Hello, good afternoon, ladies and gentlemen. First of all, I would like to thank SteelOrbis organization for the great organization, and always we are proud of being a part of that organization. So, since we are the Chinese company, we are a Chinese government company. 51% of the companies belong to government, Chinese government. So I just would like to give you presentation about our group of company, first of all. So as CIEC Group, we are established in 1997, and 51% of the companies belong to the government, so we are the employee of the Chinese government. And in 2023, last year, we had a $38 billion turnover, and total quantity that we've been dealing is 68 million tons. And our group is not only dealing with the steel business. For example, we have a forklift factory, which is the 8th biggest in the world, and which we are controlling the 25% of the Chinese local market. And we have also scaffolding production, which is $500 million investment, and we are controlling of the Chinese local market 23%. So we are the biggest steel exporter company in China. And I can say that we are the most international Chinese trading company. And we are also in crude oil sector, we are top 3 in China. In the rubber sector, we are top 1 in China. And in the cotton and the manatee trade, we are top 3 in China. So we have a 31 stockyard in China. We are not only exporter company, we are also local trader as well. We have 17 different offices all over the world. Then all the staff working in our office is the employee of the company. We are not the trader, we are the employee of the company. So those are the main offices that we have all over the world. Now I just would like to give you the brief information about the production of China. As we know, when we say China is representing about 55%, 60% of the global production. So let us get into the details. So in China, in 2023, the daily production was 2.39 million tons. And in 2023, China was using 89% of the production capacity utilization. And in 2024, the daily production, as you can see, compared to last year, in 2024, the daily production came down and the capacity utilization rate was about 84.5%. And right now, we are not expecting further production cut because it's already, right now, the China, compared to last year, is already cut down about 5% production already. So this is also production. This is the production of the world. As we can see, total production in the world is about monthly basis 153 million tons in 2023. In 2024, we've been seeing about 4 million ton increase, which is 157 million ton monthly. So this is Chinese production. So as we can see, in 2022 and 2023, almost the monthly production same as the previous year. So it's about 83.9 million ton, at least on the paper. So the total Chinese production is about 1 billion ton, 1,040 million ton, and 2024 till July, we've been seeing that the monthly production is 87 million ton. And in August, we have seen that some drop in August, which was 78 million ton in August, which is also reducing the total monthly production as 85 million ton. So this is the world figures except China. As we can see, without China, it's coming down from 80 million tons to the 60, 65, 70 million tons as a monthly production. So this is China's steel export. As you know, actually, this is what we are always saying. China is not the biggest exporter country compared to the rest of the quantity, percentage-wise. Because if you look at China last year was exporting about 6% of the total production, which is referring about 62 million ton. And it was in 2022. In 2023, we have seen about 36% increase. Then we have seen 91 million ton export, which is also referring about 9% only. I mean, when we look at the rest of the exporter company, at least we've been seeing 30, 40, 50%. But since the production is a huge production, of course, there is a big effect in the market. So the Chinese export this year, monthly 8.75. As you can see, compared to last year and the previous years, there is an increase on the export. This is for the total export of the China. So when we go to individually for the flat product is representing in China is about 55%, 60% of the total export. And when we see the flat steel exporters, in 2023, 5 million ton monthly average. In 2024, we've been seeing 6 million ton. And this is representing of Chinese export 55, 60%. Now for the long product, which is representing about 15%, 1.5. So we've been not seeing much export for the long product from China. So when we look at the 2023, about 900,000 ton, and in 2024, we've been seeing 1 million ton. So once we try to understand the market condition, the stock level is also giving us some clear picture in order to analyze the market. So that's the reason that since China is the biggest importer also for the iron ore. So here, as you can see, this is a red line, is the 2024. So compared to the previous 5 years, its iron ore stock level is higher compared to previous years. So the percentage that higher is 32% is higher than last year. So actually, it gives us a signal that the stock, since the stock level is high, it gives us a signal that the iron ore price is going to come down. But since almost 3-4 months, it's not able to break the 90 levels. And it touched about 10 days ago, it touched $90, $91, then it's gone up to $115, $113. So, rebar inventory, stock level in China. Here, the rebar inventory, as you can see, is about 4 million ton. And here, compared to previous years, is lowest. So, which is a relatively good sign. So here, hot roll coils inventory, also same as about 5.5 million ton, but still is high compared to previous years. So this is what we are seeing is some of the hot roll coil producers, they've been diverting their production from hot roll coils to the rebar. So one of the biggest indicator for exchange rate of the China, as you can see, since last year, since 1 year, the exchange rate is getting appreciated. Now the rate was, last Friday was 7.017, but now is 7.05. So it's about, which is the decrease of the 3%, which is reflecting about $18 to $20 price differences. So here, price level. That table is prepared just before China went to the holiday. So as you can see in here, just China on last Monday before going to the holiday, we have seen $40, $35 price increase. And today, there was a nation holiday in China, which was eight days. And today was the first day, when China came back from the holiday. And today we've been seeing also minimum $15 to $40 also increase on the prices. So this is the roughly information that I would like to share with you about our, the markets, Chinese market. So if you have any question, you can divert. Thank you very much. Thank you very much for listening.
Thank you so much, Mr. Hüseyin. Do we have any questions from the floor? No? China, really? Maybe I would like to ask just one, if you would eager to comment. Taking into account, how the China left for the holidays with the price move, the upward move, which you also mentioned, and today after the holiday we also have some positive movements, but also as far as I understood we have some controversial, a little bit, some announcements today about the actual amounts of this support. So I think that a lot of people are trying to understand how long-lasting will this positive sentiment be in the market. Will it last at least like till the end of the year, so China would be less concentrated on aggressive exports? How do you think?
I mean, as we know, Chinese government make some declaration about supporting the economy. So this is not the first time that we've been seeing. Actually, this year we have seen 2 times, which was $140 billion, which is injected to the economy, especially for the real estates. Because real estates in China is representing about 20 to 25% of total economy. So the government is paying attention on the recovery of the real estates. And that's the reason that what Chinese government is being doing is reducing the mortgage interest rate, and for also supporting the people for the second house purchases. Because in China, if you want to buy the second houses, you need to have the 25% cash in your hands. So the government is reduced it to 15% in order to make a more development in the real estate. And whatever the stock is available in the construction companies, the Chinese government start to purchase that stock levels and start to rent to the people. So today in the morning, the reason that the futures came down, because everybody was expecting that the Chinese government is going to announce another stimulate plan in the market, but which didn't happen. But the Chinese government is clearly stated that they are going to support their first announcement of the financial development. So what we believe as a company, and we believe in that we will not see the drop on the prices. So this is the rock bottom price. So this is what our reading of the market. And since China, 10 days ago, the prices start to move up, the local trader, international trader, they start to close up their short sales. Then it's gone to as a demand to the producer. So the producer right now, 1 month further, they became a more fully booked. And also it was a good chance for them to increase the prices because the loss that they were facing, $70, $80 per metric ton. So as per the government instruction, so they've been also increasing the price up.
Thank you so much.